right, let's go ahead and get started. Welcome everyone. Thanks for joining us today for our webinar to discuss the COVID-19 impact on the retail secondary market. My name is Melissa Geringer. I oversee communications for Bstock and will be serving as moderator for today's discussion. As we get into the webinar, please feel free to use the portal on your screen to send in questions via the Q&A tab on your toolbar. We'll plan to do a Q&A at the end of the presentation. So today's webinar will be hosted by Giorgio Vitale, our EMEA Head of Business Development. Giorgio will be leading a conversation with Bstock's Garrett Sievers, who will discuss how the pandemic has affected secondary market buyers and sellers across Europe. We'll also be joined by Dave Emerson of SEKO Logistics. Dave's going to be providing commentary on the current state of logistics in Europe. And with that, I'll hand it off to you, Giorgio.
Thanks, Melissa, and thank you for everyone that's dialed into this webinar. I'm going to talk through the impact on the secondary market and the reverse supply chain from a Restock Solutions perspective. So, Restock Solutions, for those of you that are not aware of us, we are the global leader for both retailers and manufacturers selling consumer returns and overstock inventories. We build bespoke online auction marketplace dynamics where our clients can sell their secondary market inventories directly to a diverse global group of approved buyers. Via our solutions, we enable operation efficiencies, sales velocity, and higher pricing recoveries for secondary market merchandise across all categories, conditions, and grades. Ultimately, we're increasing margin for our clients. We have over 65 private marketplaces across the US and Europe, and we have a buyer cohort of over 500,000 buyers globally. So, what have we been seeing across the retail sector? What we're experiencing, what we are monitoring is an uneven application of store closures with our clients. As many of you will know, essential goods not moving into the secondary market at the moment, although things are changing so fluidly and quickly. What we have seen is non-essential goods moving more slowly. Subsequently, this will result in more overstocks for our clients. There's definitely been a temporary pause in the processing of non-essential return inventory. Subsequently, that has created, a reduction on labor resource for our clients, and we are seeing, that the volume, the load to truck ratios have dropped. So, how has the current landscape been impacted? What has been the impact on our clients' marketplaces during the current circumstances? What I'm going to do, I'm going to walk us through a few charts to illustrate the aggregated trends, pre-COVID, during, and as we move away. Now, if you look at this chart, what you can see, from 17th of February is the beginning of a reduction across our marketplaces on demand for inventories, and as we work across a sort of 5-6 week period, what you can see as we've moved sort of towards the back end of March is demand has begun to come back. Moving on to this next chart, we're going to dive a little deeper into those trends, and considering the categories across apparel, consumer electronics, general merchandise, I'd like us to focus on the grey line representing consumer electronics. And again, as you can see, aggregating, demand for these products, you can see how consumer electronics at the beginning of the lockdowns incrementally across the European geographies has declined. And again, as we move towards the back end of this, of the relaxation of particular lockdowns, if I move into this next chart, we can see how the market has reacted, and as expected, following those government endorsed lockdowns, specifically across Italy, Spain, the UK, and France, we've experienced a reduction in demand. However, as we gradually move away from the peaks, we're experiencing a 28% uplift as opposed to the pre-COVID scenario. So I've explained some of the impact, and what I would like to do now is hand over to Garrett Sievers, who's our VP of Marketing, who's going to discuss the impact on our buyers.
Hey, good afternoon, everyone. It's nice to be with you, and thank you for spending some time with us. I want to share some perspective from a buyer. We're a two-sided network, and obviously we support sellers, and we have a very diverse buyer base, which covers over 150 countries and buyers across all categories and types. So it's no surprise, we've seen this in the news as well as experienced it in our own geographies. COVID-19 has hit small business extremely hard, and it's testing what they're known for is their grit and resilience. On the left-hand side is just the cumulative impact across the EU or by country in millions of pounds of the loss in retail sales. That loss has turned into businesses closing, letting full-time employees go, or having to change business models at a pretty rapid pace. On the right-hand side, obviously, these are headlines, the impact on jobs across Europe, or the government stimulus packages that have been launched in an attempt to assist these small businesses. So it's clearly a tough time, but our small businesses and the buyers on our platform are resilient. So as we take a look at some specifics of what we asked them recently on the next slide, you'll see a few things relative to their performance. First of all, there's been a significant impact to their revenue. As they report, they're seeing about a 64% decrease in their revenue since the outbreak of COVID-19. Now, we do see a variance here. About 3/4 of our respondents are online retailers, the remaining being either bricks and mortar or export, and so, or a blend of all three, frankly. And we do see online retailers and those that are primary bricks and mortar moving to an online platform to adjust to the realities of the new marketplace today. As they think about their buying intentions, it's a 50-50 split. About 50% are intending to buy less given the current economic conditions, while about 50% are intending to buy more. Capital has been something that they've struggled with, making sure that they can get the cash flow and the capital to invest. And they're looking and investigating. They have not taken advantage of any government subsidies at this point, but they are investigating and intending to tap into that should they need it. Lastly, there's quite a change in the inventories that they're purchasing or intend to purchase from. And this reflects their quick changes and innovation that they're bringing to immediately change the demands of their customers, whether it be changing the categories from non-essential to essential or adjusting their business models as necessary. So they've indicated they have a desire to buy more computer equipment and software, consumer electronics. Health and beauty has seen a significant uptick as we go into a shelter-in-place environment, and then home and garden. Categories that they're expressing that they would buy less at this time, and these are all subject to change as the countries open up and the buying patterns of consumers and our customers start to change back to a pre-COVID world. But currently, apparel has been slow, and there's less demand for it today. Appliances, less intent to buy, with the exception of refrigeration and storage, which is aligned with the shelter-in-place and staying-at-home restrictions. Automotive supplies, books, movies, cell phones to a certain extent, and grocery, which is kind of interesting as that has been a large growth trajectory in other parts of the world. Next slide, please. So the bstock platform remains very resilient. Similar to what Giorgio showed with you, on the first chart, we're looking at the bids per auction. And as we saw in a pre-COVID world, and immediately thereafter in Europe, we saw a decline in bids of about 5%. And most recently, those bids have rebounded to a +9. The reason we focus on bids are what drives value on our platform. The more bids, the higher the price, the better the recovery rate for our sellers. So we're very conscious of the number of bids per auction. On the bottom slide, we're also interested, are we maintaining and growing the number of bidders who place those bids? So are there more people in our marketplace participating in these auctions? Similar trends, pre-COVID, the next 6 or so weeks, down 7, and then a significant rebound here as the small businesses and buyers have responded to the changing marketplace and the opening of certain countries, the releasing of restrictions, and we've seen this healthy rebound of almost 15%. So overall, our small businesses and our buyers are reacting and pivoting and innovating as necessary to address the demands of the current environment pretty well. And one of the areas that they've expressed is interest in understanding the shipping across countries in Europe. So to give you more details on that, I'll pass it over to Dave.
Thank you. Yes, good afternoon, everybody. Just a very brief overview of the current situation as it relates to FTL and LTL movements around Europe. The map on the right-hand side was a screenshot taken yesterday from the Sixfold database, which is a database of border crossing data in terms of timing of how long it takes for trucks to move across borders. And obviously green are very delays of under 15 minutes, amber are 15 to 45, and red 45 and above. And as you can see, generally we're looking at now pre-COVID-19 levels. During the lockdowns, particularly in Italy and Spain, there was an awful lot of red on the map. So in tune with what Garrett and Giorgio have said, we're definitely seeing a rebound, obviously, that bstock see, and that we as the transportation and logistics provider of those sold merchandise actually manage. So we're seeing definite rebound and stabilization. The only thing that I guess is the thing to be, the watch to be wary of, is warehouse space remains very tight within Europe at the moment. This was already tight pre-CV19, potentially, particularly with regards to Brexit and anything that was related to the UK. And we're also seeing some customers obviously still having to exercise social distance regimes in their DCs, which are meaning that obviously processing of orders can be impacted and some small delays. But once the product gets in the truck and is on the road, we're seeing a kind of a normal circumstance regardless of COVID-19, which obviously is very positive. Thank you, Garrett.
That's great. Thanks, Dave. So considering what both Dave and Garrett have spoken about, what are our projections? What we do know is demand won't return in full force. We're expecting larger volumes, of unsold and aged inventories to gradually flow into the secondary markets. We will see a new wave of consumer returns as retailers gradually, reopen their reverse supply chain flows. And considering, in the sort of medium to long term, when things do go back to normal in the future, we expect there to be an increased focus on sustainability in both retailing and manufacturing, which will definitely be driven by anti-destruction legislation. We're already seeing this across France and Germany, and we definitely project this to gain more momentum again as things go back to normal. So, what are our key takeaways from what we've spoken about? We're clear that with many of our clients, cash is king. The importance of liquidity is paramount as the retail landscape continues to adapt and evolve to the current circumstances. Ongoing stock liquidations, as opposed to storing aged and return inventories, will keep stock levels leaner, we imagine, as things progress in the future. What we do know from years of experience, that a diverse buyer base for returned excess stock is essential for secondary market disposition channels. We definitely expect an explosion within the secondary markets, and subsequently this will result in a new generation of discount resellers within the space. So thank you again for everyone that's registered for this webinar, and I'll hand it back over to Melissa.
Great. Thanks, Giorgio, and thanks everybody. Nice job. So we're going to go ahead and get some questions answered here. We had a few come in, and again, if you have a question, feel free to use the Q&A tab on the toolbar. So first question, Garrett, this will probably go to you. So there was talk about a huge surge of excess inventory that's expected to hit the secondary market in the second half of the year. Do we think the buyers are going to be ready to purchase?
Yeah, based upon the response from the surveys of the buyers in Europe, there is definitely in the immediacy a short-term stress on their buying ability. However, based upon the outlook and the access to capital becoming easier for them, what we expect and what we're seeing already as the restrictions are lessening is that they are able to continue and maintain demand. However, it's shifting, dramatically by categories, by region, and by business type. So obviously the move from bricks and mortar to online, as countries open up and change the restrictions, and as consumers then get out, we'll see the shift in a lot of the categories. So we're optimistic, and the indications are from our buyers that they are prepared for when this opens back up, for those that have been able to weather the storm. And so we're optimistic that with an influx of inventory that we do expect, our buyers will be in a good place to continue to make purchases and supply their inventory needs.
Great, thank you. All right, Giorgio, this one is for you. What can sellers do to help lessen the impact and yet meet their need to turn excess stock into cash?
That's a really good question. And if I recall, recent conversations with a number of clients that we're going to be supporting during this pandemic, one of the things we're highly recommending is they listen to our strategies. We have historical case studies where clients have had huge influxes of aged excess inventories, and what we have done, using quantitative data from inventories we've sold, is use best case scenarios to sell that inventory. And as Garrett has reiterated, this only works with that global diverse buyer cohorts. Again, we have to factor that equilibrium to ensure we can offset those volumes with the right number of buyers.
Great, thank you. And I'm going to ask another one for you, Giorgio, that came in. So what were some of the biggest differences in terms of geography? So obviously Europe, there's all the different countries there and the borders. So what were some of the biggest differences and similarities you saw or we've been seeing?
Yeah, I think one of the things we've seen for is that Germany seemed to be ahead of a few of the other European locations with regards to kicking off their economy again. They are gradually reopening retail space. They're adopting new operational procedures to ensure the safety of their workforce and their customers. That is gradually coming into play now, particularly in the UK, where retailers with facilities maybe not in city centres, further outreach sites, they are now slowly starting to open back up. So from an operational perspective, you can see how that staggered approach is cascading now. And that's something I've noticed, is that this isn't going to be an overnight change. It's definitely going to happen at different speeds in different locations.
Great, thank you. And Garrett, I don't know if you can add to that in terms of the buyer perspective. Were there any differences, we saw in terms of what people were purchasing, or, were different types of inventory going to different areas?
Yeah, nothing that's played out that I haven't already shared. I think what is, what the benefits of the platform are is that, this diverse buyer base. So as geographies, as governments, as things change in localities, the diversity of the buyer base really will pay off. And where demand opens up, the buyers will be ready in those areas. And we'll be doing, heavy outreach and in marketing to them to let them know about the categories that are available. But nothing specifically from our buyers would suggest that, there isn't a real desire to get to business as usual, obviously, just in a changing and very fluid environment.
Great, thank you. Dave, I had one for you. So how elastic is the logistics system? I'm talking in terms of how quickly the market can return to normal with readily available drivers and equipment.
Yeah, as I said earlier, Melissa, I think we've already seen that kind of elasticity bounce back in the last 4 to 6 weeks. Obviously, most governments in Europe, even during the height of the lockdowns, particularly in Italy and Spain and to a certain extent Germany, and obviously here in the UK, made transportation, trucking, all part of the key worker program. So generally things kept moving, albeit there were some challenges with equipment and lack of drivers, but certainly in the last sort of 4 or 5 weeks, 3 or 4 weeks, probably more realistic, we've definitely seen that almost bounce back to normal levels.
Great, and then a follow-up on that, are you expecting shipping rates will be at a premium? As in, is everyone going to be trying to schedule the same truck to deliver something, or do you feel like the return to a new normal will be more sporadic, leading to discounting?
Yeah, we're not forecasting any major uptick in pricing and demand. I mean, I think that, again, the countries are going, not every country is going back at the same time. Even the countries that are coming out of lockdown are all doing it, obviously for medical reasons, but very, very phased. So we're not seeing anything that's given us cause for concern in terms of capacity, supply or demand outstripping capacity, really. So no, I don't think we're concerned. And obviously, it's always those situations that have the relevant negative impacts on pricing. We're not necessarily thinking that that's gonna happen outside of a couple of markets that can be particularly susceptible to those kind of impacts. Markets that have pretty much a one-way traffic dynamic are always more susceptible to those, but there's not many of those in Europe anymore.
Okay, thank you. I've got a couple more here. Garrett, this one is for you. What portion of our buyer network is online resellers versus brick and mortar? So total network.
Yeah, so the following percentages are not going to add up to 100 because often they're doing both. But generally speaking, about 75% do online, 25% are bricks and mortar. And again, there's some overlap. And then particularly in Europe, we do see a higher percentage, about 15% additionally doing export of goods out of the European Union. So it's a diversified base. And again, they're moving and changing as we speak. But we do see a higher propensity to do export in Europe than we do in other countries.
Great.
And as you know, I'll just add to that, Melissa. You know, we've seen the impact. The difference between the online retailers is they've had about a 44% more impact. Pardon me, bricks and mortar have had about a 44% more impact on their business than than online retailers. So, you know, the shift is happening, and they're adjusting because they see those trends in their business.
Yeah, absolutely. Thank you. All right, last one here. This is for you, Giorgio. Are there specific strategies that you're telling your sellers that they should be thinking about now to prepare for returning to a new normal?
No, I mean, what we are being is very realistic on the current landscape, and what traditionally would be, you know, a primary objective for many sellers will be net recoveries. You know, velocity is becoming more and more important in the current state. So, you know, we are adopting strategies based on the current landscape, and our clients are reacting very well to that. What we're trying to do is ensure that we meet those demand metrics for the inventories that we're selling. So yeah, it's definitely fluid, Melissa, and you know, as Dave and Garrett have said, you know, the fluidity of what's happening, we are constantly adjusting and measuring performance on a daily cadence.
Super, thank you. All right, well, that is going to wrap things up for us. Thank you to all the attendees that joined today, and of course, thank you so much to our panelists today as well. We're going to be sending out a copy of the presentation tomorrow. Please don't hesitate to reach out in the meantime. That's Giorgio's email. You can also email cs@bstock.com anytime as well. We hope everyone stays well. And again, thank you so much for joining.